I always say tariffs is the most beautiful word to me in the dictionary.
Tariffs.
This is a direct attack.
What's really happening? Why is Trump putting taxes on goods from his own close partners? Why doesn't he seem to care if the stock market goes down? Does he actually have a plan? Yes. Believe it or not, I'm here to tell you. Yes, he does. As Trump's new Treasury Secretary, Scott Bessent, said recently,
President Trump's tariff policies have begun the process of reorienting our international economic relations.
That's right. He said tariffs have started the process. In other words, all this mess with tariffs is just the beginning of something much bigger. A plan to change the world trade system that the U.S. helped build. This kind of big shift has only happened twice before. First, when the Bretton Woods system started after World War II. And second, in the early 1980s, when Reagan and Thatcher helped begin the neoliberal world economy. So here we are now. Is this the start of a totally new global system? One that the U.S. will lead again after this chaos? One where countries will be sorted into 3 groups? Or, as Scott Bessent describes it, we should clearly show that there is a green group, a yellow group, and a red group, and let every country know where they stand. In this system, some countries will get low tariffs, military help, and good access to U.S. dollars, while others will be on their own. That's the idea I got from reading the speeches and writings of Trump's top economic advisors. So let's jump in. What is this MAGA global plan all about? Could it really work? Or is it just a crazy idea made by a leader and his helpers? What does the Trump team really want? To understand the plan, we need to start by looking at how Trump and his team think. Let's ask, what does Trump's team really want? To answer that, we first need to know who is in his new economic team. First, there's Scott Bessent, the new Treasury Secretary. He's a very rich former hedge fund manager who once worked with George Soros to crash the British pound in the early 1990s. He also used to teach economic history at Yale University. Then we have Stephen Moran, Trump's new main economic advisor. He went to Harvard, worked in finance, and made people on Wall Street talk with his paper called A User's Guide to Restructuring the Global Trading System. Both men talk a lot about one big danger to the U.S., losing its factories and industrial jobs. That's why they liked Trump's campaign. Because Trump talked about making America a strong industrial country again, like it used to be. And yes, it really was like that. If you look at this chart, it shows that in the 1960s, the U.S. made a lot of things in factories, and manufacturing made up about 27% of the economy. Today, that number is only 11%. Trump's first trade war didn't really stop that downward trend. But why does it matter so much? Isn't the American economy bigger than ever? Why does the Trump team care so much about bringing back factories? There are 2 main reasons. The loss of industry has hurt the middle of the country badly, and those areas mostly voted for Trump in 2016. The U.S. is now far behind other big countries like China in making things. That's a problem if there's ever a war, because making weapons and supplies fast is easier if you have strong factories and skilled workers. So of course, Trump's team pays a lot of attention to China. What if China tries to take Taiwan? Yes, right now the United States has a better navy. But as Vice President J.D. Vance pointed out, deindustrialization in the United States has gotten so bad that just last year, a Chinese government-owned company built more ships than the United States has built since World War II. When you see that, it does make sense why Trump's team wants to rebuild United States factories and industries. But still, does he really need to put tariffs on everyone at once and say things like this about his allies? They're taking our jobs, taking our money, taking many of the things they've been taking for years, both friends and enemies. And honestly, sometimes our friends have treated us worse than our enemies. After all, the United States has been the most powerful country in the world for decades. It helped build the very trade system we use today. So why is it so unhappy with the way things are? To understand why the United States is unhappy with the current system, we need to look back at the full history shown in this chart. Let's take a quick look at the history of the global system that the U.S. built and led. The loss of U.S. industry didn't happen suddenly. It happened slowly over time, under 2 major systems that the U.S. itself helped create. The Bretton Woods system, which lasted from 1944 to 1971. The neoliberal world order, which started in the early 1980s under Reagan and lasted until Trump's first term in 2016. The time in between those two, it was more of a transition phase. Let's start with Bretton Woods, because understanding it helps explain what Trump's team wants today. The Bretton Woods system was created in the 1940s. The economic part came from a big meeting in 1944 called the United Nations Monetary and Financial Conference, which was held in Bretton Woods, New Hampshire. At the same time, there were other important meetings about security. These led to NATO and the U.S.-Japan Security Treaty. We can group all of this together and call it the Bretton Woods Economic and Security Order. When a country joined this system, three things usually happened. It tied the value of its money to the U.S. dollar, and the dollar was tied to gold. It got military protection from the U.S. Some even hosted American military bases. The U.S. helped these countries grow their own industries, even if it meant competing with American companies. For example, the U.S. gave out Marshall Plan aid after W2 and allowed its allies to protect their own markets from U.S. competition for a while, but still gave those countries access to the U.S. market. If we go back to Besant's idea of the green, yellow, and red buckets, all the close U.S. allies were in the green group and got these benefits. Neutral countries didn't get the same support, but they could make their own deals. Communist countries were left out completely. Now, some people think the United States got a bad deal in all this, that it gave too much to other countries. But that's not really true. And here's why. The United States really wanted to stop another world war. By helping Europe and Japan recover, it gained strong and loyal allies, which it needed during the Cold War. American companies also needed customers, so by making its allies richer, the United States got richer too. The system made the U.S. dollar the main global currency, which gave the United States a huge advantage. French Finance Minister Valéry Giscard d'Estaing once called this the exorbitant privilege, because countries all over the world needed U.S. dollars to trade. That meant the United States could spend more around the world than it earned, and not face a crisis, something most countries could never get away with. As the world economy kept growing, more dollars were needed, but there wasn't more gold to back them up. So the United States had two choices: keep printing more dollars, which would weaken the gold system; stop printing dollars, which would slow global growth. This is known as the Triffin dilemma, a tough choice between keeping the dollar stable and helping the world grow. In the end, the United States chose to leave the gold system. In 1971, President Richard Nixon made a big announcement. "I have told the Treasury Secretary to temporarily stop changing dollars into gold or other assets." This led to a rough time in the global economy, but after that chaos, a new world system began, the neoliberal world order, started by Reagan and Thatcher in the 1980s. After the gold system ended in the 1970s, a new way of running the global economy started in the 1980s. This system is known as the neoliberal world order, led by United States President Ronald Reagan and United Kingdom Prime Minister Margaret Thatcher. This system was based on four main ideas: lower taxes on imports, called tariffs; easier investment rules between countries; currencies that changed value freely on the market; the United States providing safety and protection for most countries that followed its lead. Unlike Bretton Woods, this system had no official agreements where countries promised to use the U.S. dollar. They just did, because it was the most stable and widely accepted currency. But this setup had a big side effect. It gave other countries a reason to collect U.S. dollars as fast as possible. They did this by exporting a lot to the U.S. and buying less from the U.S., so they could build up their dollar reserves. Here's the strange part. Even though the U.S. supported free trade, the World Trade Organization, WTO, still let developing countries charge higher tariffs on U.S. goods than what the U.S. charged them. Why? Because the U.S. believed that making other countries richer would make them more friendly, just like it had worked with Germany and Japan after World War II. So, compared to Bretton Woods, more countries became green countries. They got access to the U.S. market, the U.S. dollar system, and protection from the U.S. Navy for their trade ships. That sounds like a good deal. But once again, the United States got something very important in return. In this new system, the U.S. dollar stayed strong because many countries wanted to keep buying U.S. assets like stocks and government bonds. This demand for dollars made the dollar more expensive than what would normally make trade equal. As Stephen Moran wrote, the strong dollar gave the U.S. an even bigger advantage than it had under Bretton Woods. Why? Because a strong dollar helped the United States keep military bases and global influence, even though the U.S. economy was getting smaller compared to the rest of the world. A strong dollar made many Americans richer, especially people who already had money. But there was a problem too. It became harder to make things in America because a strong dollar made U.S. factories less competitive. That's why many manufacturing jobs moved overseas, especially after China joined the WTO in 2001, causing what's now known as the China shock. Even worse, the strong dollar mostly helped the wealthy and made income inequality worse than it was in 1929. This helped lead to the election of Donald Trump in 2016, who started his trade war in 2018. That trade war raised tariffs mostly on China, but China always responded with more tariffs too. So in the end, China still had higher taxes on U.S. goods than the other way around. Sadly, this didn't stop U.S. industry from shrinking. And it didn't stop China from becoming a manufacturing superpower, especially in electric cars. So when Joe Biden became president, he tried a new idea: give big money support to U.S. factories, just like China had done before. That led to many new factories opening. But according to Besant and Moran, this also made the government deficit very large. Now we are clearly moving further and further away from the neoliberal system, a system the United States built, and that helped it stay the richest and most powerful nation for decades. But according to Trump's team, that system also caused industry to collapse so quickly that it has now become a national security risk. Trump's three-step plan for a new world system. This is the MAGA plan, a strategy to rebuild United States factories and keep the U.S. dollar as the world's main currency. Trump has made it clear, if you lose the reserve currency, you turn into a poor country. We must keep it. But here's the problem. Most experts say you can't do both things at once. You can't bring back factories and keep the dollar strong around the world. But Stephen Moran says, actually you can. In his paper, he shows that it might be possible to do both. Still, his paper isn't a detailed plan. It's more like a cookbook with different options. Also, Moran and Besant haven't explained the full system with the green, yellow, and red groups yet. So, to build this three-step MAGA plan, I had to read between the lines in everything they've said so far. And no, I didn't secretly get added to some U.S. government group chat. For each step below, I'll explain where the ideas come from. Step 1. Tariff chaos. This is where we are right now. The government is raising taxes on imports, even from friendly countries. They know this will hurt the economy in the short term, but they don't care. This is all about gaining power to negotiate better deals later. Besant said that at first he didn't like tariffs, but now he sees that Trump uses them as a new way to pressure other countries. And Moran said the same thing. Before joining the government, he wrote that tariffs should be used first, to build pressure. Then better trade rules can follow. So the goal of this chaos is simple. Build leverage, scare other countries a bit, then make real deals. Step 2. Fair tariffs. Remember how China reacted to Trump's tariffs by adding its own? That back and forth could go on forever. But if every country agreed to equal tariffs, then things would be more fair. Nobody would need to keep raising their taxes. Besant says the goal is to make the global trade system reward real creativity, good rules, safety, and fairness, not cheating, stealing ideas, or paying workers very little. A lot of economists say this is wishful thinking. They say trade wars only make things worse, like what happened in the 1930s. But Moran disagrees. He says, everyone wants to sell to the United States. They have no other good choice, so they'll accept the pressure. Trump's first trade war failed partly because countries like China sold goods through other countries like Mexico and Vietnam, who then sold them to the United States. That's why this time, the plan is to raise tariffs on almost everyone, so countries can't get around it. Moran writes, tariffs give the United States power to make deals. If they hurt enough, other countries may agree to new rules, maybe even a deal to change their currency value. Step 3. A new currency deal, the Mar-a-Lago Accord. This would be the big final step, a new international agreement like Bretton Woods or the Plaza Accord, but made at Mar-a-Lago, Trump's home in Florida. The goal would be for countries to agree to raise their currency's value against the United States dollar, making American exports cheaper and fairer. How does that connect to the green/yellow/red system? Well, Moran doesn't talk much about this part anymore, probably because he's now in government and has to be careful. But he once said, if we could just lower the dollar's value a bit, we wouldn't even need all these other trade tools. Our exports would be more competitive and we'd stop being cheated. In his earlier writings, he mentioned weird ideas, like charging other countries a fee for using the dollar. But that's risky. More likely, the United States will offer this deal. If you agree to tie your currency to the dollar and raise it when needed, you get access to U.S. markets, help from the U.S. military, and a place in the U.S. dollar banking system. But this time, countries will probably have to pay for that protection, like vassal states. Yes, this part is my own guess, but listen to what Besant recently said. Trade isn't just about goods, it's also about military and politics. President Trump sees the world as a connected system that can be reshaped to help the American people. And that's why I think this plan, even with all the chaos, actually makes sense. Trump's team believes the current system is broken. They've said the chaos is just to build pressure. They've said they want fairer tariffs. And they've hinted that if a deal is made, tariffs could go way down. If enough countries agree to join this new system, Trump may actually get what he wants, a weaker dollar, to help exports, while still keeping the dollar as the world's main currency. That could bring some U.S. factories back, at least in theory. But it all depends on whether other countries are willing to join this plan. So yeah, if enough countries join Trump's new world system and agree to tie their currencies to the U.S. dollar, then Trump might actually get what he wants, a weaker dollar to help U.S. exports, but still keep the dollar as the world's reserve currency. That could help bring back some U.S. factories, at least in theory. But here's the problem. For this to work, the U.S. has to make it really attractive for other countries to become a green country. And that's where things get tricky. Because Moran and Besant may be smart and well-read, but their plan depends on countries being willing to raise the value of their money compared to the U.S. dollar, rely on the U.S. military for protection, but now pay for it. That's a lot to ask. That kind of trust used to exist when countries joined the Bretton Woods system after World War II or when they agreed to the Plaza Accord in 1985. But today, the U.S. has broken trade agreements before, even ones it made with close partners like Canada and Mexico. And at times, it has even threatened allies, or made moves that seem like it might take over territory from them. So how can other countries trust the U.S. enough to join a new system like this? If no one joins, then Trump's team will face a hard choice. Either give up the dollar's global status and lose the power and wealth that comes with it, or keep the dollar strong, but accept that the U.S. has to keep relying on other countries' factories like those in Mexico, Europe, and Japan. But yeah,